This is Boom Bust, broadcasting around the world and covering all aspects of our global economy in the 21st century. I'm Ben Swan.
And I'm Christy I in Washington. Here's a look at what's on deck today. Following a surge in stocks on trade optimism last week, stocks have cooled, causing concern to tear through the markets. Peter Schiff of the Euro-Pacific Trading is standing by to break down stock jitters and what this role plays in the precious metal sector. Plus,
as technology continues to speed forward, should society tap the brakes just long enough to sort out the developments? Today, we talk with Johan Osterlund. He's from Copenhagen, Denmark, about the growth of microchipping humans and what the role of controversial practices could play in a cashless society. So much on our plate today, so little time. Let's dive right in.
Chinese e-commerce giant Alibaba set new records on Singles' Day, the world's largest 24-hour shopping event, bringing in over $31 billion in gross sales. This was the 11th edition of the annual Singles' Day event, which traditionally exceeds the spending by customers during any single U.S. shopping holiday, such as Black Friday or Cyber Monday. This year, Alibaba placed a heavy emphasis on live streaming to help sell goods. Online personalities and celebrities such as Kim Kardashian, Via, Jem, and Taylor Swift made appearances to boost sales and up the hype factor as it faced competition from other domestic rivals like JD.com and Pinduoduo, all offering their own sales. Singles' Day is being held up as a bellwether of the Chinese consumers' willingness to spend in the face of a domestic slowdown. Amid the ongoing trade war, there was some concern that American brands would suffer, but that was evidently not the case. American brands came in second by GMV in terms of countries selling to China, and there was no evidence that sentiment was on decline. Given this is the biggest haul in the history of Singles' Day, Alibaba looks to be well positioned to weather out the trade war versus its peers. With Alibaba busy preparing to issue another $15 billion in landmark share sales later on this month in Hong Kong, a new Singles' Day record could help boost demand for shares, as well as to lift the Asian financial hub as it struggles from the continued riots. Meanwhile, shares everywhere else around the world fell Monday as hopes for a breakthrough in the trade war between China and the U.S. diminished after President Trump and Washington had agreed not to gradually roll back tariffs. Early optimism that pushed the S&P to all-time high had gone too far, and the market should have known better. After all, this is the umpteenth time that we've experienced this one step forward, two step back rhetoric, where promises of a breakthrough fell short and talks collapsed at the 11th hour. Looking further ahead this week, we can expect to see more fallout amid trade balance, manufacturing, and industrial production as the global trade weakens.
Well, Germany is set to release third quarter growth data Thursday. And after two consecutive negative growth quarters, it is expected that Germany is technically in a recession. The biggest issue for the country is industrial output, which actually fell more than expected in September, dropping 0.6% on the month, pointing to ongoing weakness. Manufacturers, which are reliant on exports, have also suffered from a slowing world economy and uncertainty linked to trade and to Brexit. And while there had been hopes for a turnaround, that hope is fading fast as Germany's industry is contracting due to shifting consumer trends, shrinking investment spend, and souring sentiment. Despite the slight uptick in September, industrial orders, the reality is structural flaws in the industrial sector will hold back any recovery. The reality is this: Germany is currently struggling with a rapidly aging population, which constricts the skilled workers market, keeping productivity growth weak. A strong rebound will be unlikely as skilled workers, frankly, are hard to come by. In addition, German banks are now operating with the highest cost in the Eurozone, with a combined return on equity in the second quarter of 0. That low profitability is a huge risk to the financial stability of the local economy as it hampers the buildup of equity. Further stimulus, that's also unlikely to be meaningful in a country committed to running a balanced budget. Well, meanwhile, Wall Street's rally, which has been roaring over expectations of a U.S.-China trade deal, has stalled. After the Dow Jones Industrial Average, the S&P 500, and the NASDAQ all finished at record highs on Friday, stock futures for all three are now lower. In fact, all three major U.S. stocks indices posted highs, and the S&P 500 registered a fifth straight week of gains on Friday. But what seems to be slowing things down, Christy mentioned it just a minute ago, concerns about China pushing for additional tariffs to be removed by the Trump administration. Joining us now to discuss this and other market stories is the CEO of Euro Pacific Capital, Peter Schiff. Peter, thanks for being here. So let's talk about.
Thanks for having me on.
Yeah, let's talk about what seems to be halting some of this trading is the issue of China and the fact that President Trump appears to be kind of walking back the idea that a deal is about to be reached. How do you see it?
Well, I've said from the beginning that there will be no substantive trade deal reached with China. In fact, we're not even talking about a real trade deal anymore. We're just talking about phase one. And phase one is basically nothing. And I think what the Chinese basically want to agree to nothing is for all the tariffs to be rolled back so that we return to the status quo that existed before the trade war began.
Meanwhile, Walgreens now, they got a boost this week after reports said private equity giant KKR and Company has formally approached the drugstore group of what could be the biggest leveraged buyout in U.S. corporate history, coming in at around $70 billion. So if this entire deal comes together, how significant could be the terms of flexing the power of private equity here?
Well, you know, we're having a lot of private equity deals in the era of cheap money. You know, even though interest rates have moved up a bit, we have 1.5% Fed funds, we have a inflation rate well in excess of 2% per year, even the way the government measures it. So with all this cheap money around, there's a lot of deals that are being done. But if the Fed were to allow interest rates to rise to a normal level, a lot of these deals would not be done, and I think the economy would be restructuring in a much healthier way. Instead, we're continuing to inflate a bubble, and we're propping up companies that would be better off going through a bankruptcy.
So what would actually be the benefit of actually going private here? They haven't been private since about 1970.
Well, I don't know. I mean, I'm not involved in this transaction, but I know there's usually a lot of costs that are saved. If you're not a public company, you don't have to do all of the reporting that is required of public companies. But if they're financing the transaction by going deeply into debt, you know, this is something that will ultimately probably be problematic when the Fed loses control of interest rates and interest rates ultimately rise in a severe recession, which is my forecast.
So, Peter, we know you love to talk about gold and silver. Gold and silver prices have been pretty steady today, but late last week, the precious metals slumped a little bit to three-month lows. Over the weekend, we saw more violence in Hong Kong between police and protesters. Do you think that will cause the price to start to move again? Obviously, folks looking for kind of a safe hedge right now.
Well, the real driver behind the rise in the price of gold is central banks, not only the Federal Reserve, but central banks around the world. And what happened last week is I think we had some profit taking in gold based on some false optimism of a trade deal, which again is not going to happen. Whatever we get will be won't be anything of a deal. It won't change any of the dynamics between the United States and China. But interest rates also rose rather sharply later last week, particularly on the long end of the curve. And that also caused some selling in gold. But ultimately, I think the reason that interest rates are rising is because inflation pressures are rising in the economy and because there's not enough demand for all of the bonds being sold. All of this is very bullish for gold. And so rather than simply selling bonds, people should be buying gold because they need to get out of the dollar. In fact, they need to get out of fiat currencies in general and seek a real safe haven, and that's gold.
And as we come full circle here, you keep mentioning about the trade deal, that it really seems to be, the way you're kind of laying it out, political theater more than anything else, that there really is nothing substantial about it. If that is the case, do you think that both sides will attempt to make some kind of announcement looking as if they have won on behalf of their respective sides within the next few months as part of theater?
Well, I am sure Donald Trump, will make lemonade out of whatever lemons we end up with on this trade deal. I mean, he'll talk about it as if it's a victory, just like he talked about, the USMCA, which was simply NAFTA with a worse name. So he'll claim that this was a great deal, even if absolutely nothing is accomplished. You know, the important thing is that the trade deficits are bigger now than they were when Trump became elected. And the whole purpose of the trade war was so that America would be winning on trade again. Well, we're losing on trade bigger than ever, and so Trump would not have achieved or delivered on that promise, whatever he wants to pretend.
Yeah, we can't let facts stand in the way of political theater, though. Peter Schiff of Euro Pacific Capital, thanks for your insight.
Credit Suisse's Jim Amin resigned as CEO of the Investment Banking and Capital Markets Division, adding to the months of turmoil. This move is the third change at the top of the Swiss bank in less than 5 months, coming just weeks after the spying scandal. Jim Amin, succeeded by David Miller, is not the only C-suite exec to leave in recent months. October 2019 now marked the highest month on record of CEO departures, with 172 executives leaving their posts either voluntarily or escorted out with a cardboard box. For the year through October, 1,332 U.S.-based companies announced CEO departures, marking the fastest pace since 2008, where bad company performance was blamed by the CEO. Notable recent departures included McDonald's firing its CEO Steve Easterbrook, Under Armour's Kevin Plank stepping down, ServiceNow CEO John Donahoe jumping ship over to Nike, WeWork's Adam Newman being ousted, and now Gap's Art Peck tendered his resignation after delivering another failed quarter and full-year guidance update. Ousted execs this year were driven out by profit worries, retirement, and misconduct, with the tech sector announcing the second highest number of CEO changes this year at 181, up 24% from last year.
Well, time now for a quick break, but hang in there because when we come back, technology seems to charge forward daily, right? With new developments in almost every space shaping the incredible rates. But there are technologies being properly vetted before use. On the other side of the break, we talk with Johan Osterlund of BioHax to break down the state of microchips in humans and whether they live up to the hype. And as we go to the break, here are the numbers at the close.
There are concerns that the new head of the ECB, Christine Lagarde, may push fiscal policy into very political territory. Lagarde is expected to use her new position to push through political ideas such as closer fiscal coordination between the European nations. In an interview with the French radio last week, Lagarde said, "Those that have the room for maneuver, those that have a budget surplus, that is to say Germany, the Netherlands, why not use that budget surplus and invest in infrastructure? Why not invest in education? Why not invest in innovation to allow for a better rebalancing?" The big question looming over Lagarde will be whether she attempts to use the might of the ECB to control how European countries spend their budgets and whether or not she might try to punish countries that do not behave financially in a way that she deems correct. Lagarde also insisted in the past that negative interest rates have made life better in Europe, claiming that those rates are more important than the protection of people who hold financial savings. Lagarde has also weighed in on the so-called green bonds, or debt financing to fight climate change. She is in favor of using the ECB's balance sheet to purchase them, which, whether you agree with the position or not, is nonetheless political. The real test for Lagarde will be how her tenure at the ECB is met by an increasingly populous set of movements across Europe that have already resulted in mass protests.
Well, it turns out that one of Uber's biggest investors, SoftBank, is also backing Uber's biggest competition in Latin America. This is reports that Latin America, which was one of Uber's biggest strongholds, is now the worst single region for the ride-sharing company. And the biggest reason for that lack of growth? A Chinese ride-sharing company. Christy, how do you say that?
Didi Tuxing.
See, that's the right way to say it, which has been rapidly growing in Latin America. In fact, the country of Mexico, let's take that as an example, where I'll just call it Didi, has grabbed about 30% of the market in cities where it operates. Didi also has a significant presence in Brazil, where it acquired an existing ride-sharing company. Again, Didi is backed by Japanese investment firm SoftBank, which also backs Uber. And how about this? In Colombia, Uber Eats is facing fierce competition from food delivery service Rappi, which recently received $1 billion in funding from SoftBank. And beyond just the issue of competing industries. Uber has also been losing talent to those same companies, Didi, Rappi, and India's Oyo Hotels and Homes, which is also backed by SoftBank. Do you see a theme developing here? At this point, there are a lot of eyes watching to see how SoftBank manages this competing interest issue. But after the SoftBank-backed WeWork IPO disaster, not everyone believes that there is an actual method to this madness.
Imagine showing up for work and instead of swiping a key card to get into the building, you simply just wave your hand and a microchip inserted under your skin gave you access. For some people in Sweden, they don't imagine this life. It is their life. Thanks to a company called BioHax, biochipping has taken off as an increasingly common alternative to the use of key cards and e-tickets. After being injected with a syringe between the thumb and the forefinger at roughly the size of a grain of rice, these chips are designed to render users' lives more convenient by replacing the need for a cumbersome amount of cards, passcodes, and signatures. Joining us now to discuss is the founder and CEO of BioHax, Johan Austerland. So when we talk about this issue here in the US, it still sounds very sci-fi, but in reality, people in Sweden have been using this technology for several years. So how common is it, and what do all these people use it for?
So I'd say it's per capita more common than any other place in the world. And most people use it for single sign-on on computers to rid themselves of passwords, gym access, train rides, closed-loop payments, smart office, smart home personalization. I mean, we're doing payment in the next couple of weeks, I guess, which is going to relieve anyone from having to handling money. I mean, paper notes is extremely cumbersome for any nation state, and just adds risk and clutter. So
it's pretty incredible technology. Can you explain a little bit about how the technology works? Because obviously people lose their jobs, they move to new apartments, they change their gym membership. Some people actually go and some people just fake it. But what is the process for updating that microchip once it's already inserted in the skin?
So it'd be kind of drag if you had to replace the chip every once in a while and every time you move or whatever. So all you have to do is you become the root key instead of you having to handling 10, 15, 20 keys and disconnected tokens. So the only thing you do is basically you change the gym. Instead of getting their card, you supply them with your key, and they facilitate that in their system in the duration of you being a member. Exactly the same thing with a job. I mean, you load credentials onto a card via system. So if someone changes job, you just remove them from the system. But here we make the user the root key. So the user is the distributor of their keys rather than the other way around.
So you're basically flipping the entire model, which is very interesting. Now, in 2017, there was an attempt by a Wisconsin company to implant these chips in their workers. The company 3 Square Market didn't receive a very positive reaction. So have you found that in other countries, specifically in the US, that there is a picture of the lowly worker being chipped, monitored, and being tracked?
I mean, you can't escape the fact that it does lean towards the 84 Orwellian dystopia, and I mean, who wouldn't think so? Because everything we've ever seen that has microchip or implants featured in a movie or anything else, it's either polonium, tracking device, or explosives, which it's all the information we ever had. I mean, this is kind of flipping it by putting you in control and making this tiny thing a part of you, I mean, you dictate preferences on sharing, you dictate everything about it. So it's not employer saying, employee, get this chip. It's like 99% is the other way around. It's employee saying, why don't we use this badass technology in our workplace? Because they do. And I mean, the media does portray it in all different ways, but I'd say it's a good thing being scared of technology, because if you are, you get informed. So I think I'd rather scare people and make them inform themselves of what it actually is and how it works than the other way around.
Yeah, and it is interesting how they become, as you said, kind of the root of all of this, and they share that identifier. But the company name, of course, is BioHack. What about the issue of hacking? And I'm sure a lot of people are concerned about this as well, because these chips do release a signal, essentially, and I believe it's an NFC signal. But is it possible for hackers to read those chips separately from their intended use, to pull information from them, to change them? How do you avoid that issue of hacking?
So nothing is unhackable. Let's just get that straight.
Right.
I mean, our primary goal is basically making everything just stupendously boring to try and get. So the actual hack would never reward itself once you get to the goal, because you'd get to an extremely compartmentalized set of bits. So, I mean, unless you're a nation state or a couple of nation states going together to try and pawn blockchain, there'd be no reward at the end of the hack. So if you just make it boring and no big reward at the end of the road, no one's going to hack it.
Well, from bags to bottles, some 13 million tons of plastic flows into our oceans every year, according to a report from the United Nations. Well, now, some cities are hoping to utilize the excess plastics as a functional means instead of sending it overseas. RT correspondent Natasha Sweet has more from Los Angeles.
There's no question people around the world are concerned over the use of plastic and what it's doing to the environment. And the reality is that plastic is still being used on a daily basis. The solution? Well, some cities like here in Los Angeles are hoping to pave the roads with plastic instead of throwing it away. With at least 13 million tons of plastic flowing into our oceans each year, there could be more plastic than fish by the year 2050. The UN says 100,000 marine animals die each year due to plastic-related causes. And while there's always recycling, things aren't so simple anymore. Last year, China announced it would no longer buy plastic waste from the U.S. According to the recycling company GBD International, European countries are recycling 35 to 40% of their plastic waste. The U.S. only recycles 10%. But a way to fix that, according to the City of Los Angeles, is utilizing this waste to pave roads. The City of Los Angeles is working with a company called Techni Soil. They're testing out a new method for paving roads using repurposed plastic as a binder. The first part of this pilot project is set to be constructed here in downtown on First Street later this year. The plastic asphalt is made by converting pellets of plastic into an oil that is mixed in with materials used during the normal paving process. According to the City of Los Angeles, using plastic will help cut down on emissions, material costs, time, and the roads will be reportedly 6 to 7 times stronger than those made with traditional asphalt.
We're looking at using 100 to 200,000 bottles per lane mile, or 2,800 to 57 pounds per lane mile of plastic used on the streets.
But is there a possibility of plastic particles getting into the air we breathe or the ozone if temperatures rise?
What happens is the plastic binds to the aggregate, and basically it will stick and adhere to that forever. So there's been no leaching or no toxicity or contaminants associated with testing of this product.
Keith Mose, Assistant Director for the Department of Street Services, says this may be the solution for the growing recycling crisis.
This is, using polymer plastic binders could revolutionize the construction industry when it comes to construction of roads and highways, and it could lead to a new era of sustainability and less consumption of raw aggregate products.
Consumer Watchdog, a nonprofit that studies issues in California's recycling industry, estimates more than 40% of redemptive centers have closed in the last 5 years. Replanet, California's largest operator of recycling centers, closed all of its 200
284 centers back in August.
Now, this concept of paving the roads with plastic is nothing new. In fact, India has some 62,000 miles of roads already paved with plastic. We'll just have to wait and see if this trend also catches on here in the U.S. In Los Angeles, Natasha Sweet, RT.
And Christy, you're actually from Los Angeles. What do you think about driving on plastic roads?
I think it's such an interesting concept, especially in LA where you have like all this heat. LA highways are already like mixed with a different type of asphalt than that of the East Coast. Our asphalt is much less porous. So it'd be interesting to see how this plastic can withstand, because especially if they're already doing this in India, I just don't know why it took the US this long to adopt something that, say, a developing nation has already been doing.
It would also be interesting to see how long the longevity of the roads in India have been. I mean, Natasha mentioned they're saying 6 to 7 years longer. But a lot of cities in the U.S., you just don't find any kind of sustainability for the roads.
Exactly. It's a different transportation sector too.
For sure.
That's it for this time. You can catch Boom Bust on DirecTV, channel 321, Dish Network, channel 280, or streaming 24/7 on Pluto TV, the free TV app, channel 279.
Or as always, you can hit us up at youtube.com/BoomBustRT. See you tomorrow.
And it's now time for your global stock market walk for the week.
This would actually mark the slowest year-over-year growth.
If wages are flat, even setting aside concerns about equity and human welfare. The most from this trade war that he's chosen to initiate with China. Want more Boom Bust? Of course you do. Then don't forget to subscribe.